All right, guys. So was able to get it all figured out. I guess the issue is it was kind of, like I said, I've been recording these videos so many times back to back, then trying to upload them, and it just kept like messing me up. So yesterday I was able to get like a partial session in, but I was able to figure it out because apparently I lost track of my recordings. I literally record every trade session, and I guess I ran out of space, right? So stupid problem to have, but that's it's not the issue anymore. I erased them. So I was able to finally get like a start to finish. Today being Sunday, the 23rd of November. So weekends wise, I typically don't. Weekends is generally like when I work on like different strategies, just kind of build the account up to what I would trade with starting Monday. And then Monday, I always make sure I keep whatever that minimum is. So, to the left of this, I'm all about trading responsibly. Like you can make a lot of money doing this, but you can lose it too. So some people, they keep the account, a nice size in the account, which is fine. I mean, it gives you a lot of grace and comfortability when it comes to losing. Me, I like to stay uncomfortable because it keeps me like 100% focused and making sure that I'm not like making emotional trades or um and most definitely not risking like my account, right? So as I always mention, when I start off, I kind of put two times whatever's in the account, or whatever my initial trade is, and that gives me two chances at least to do well, right? And get into the motion. If for some reason I bomb it, then I have to upload money again, but same method, and then I give myself that second opportunity. If I miss that, it's not that big of a deal. It's not the end of the world because I'm not like putting up a lot of money, right? But on the other end, you have the opportunity to make it. So first example, and I have the weeklies and monthlies and yearlies up there because people, I mean, we all work for somebody or we've had to or whatever your case is, and we want raises, we want promotions, and those promotions, 10, 15,000 maybe, but like in hindsight, it's not really like a lot on your check, right? Um, but with something like this, you can, make that same, or you can make more, you give yourself a raise. So like even like that first tier that I have at the very top, starting off with $20, that means you have a account size of daily of 40 and you're starting off with 20, jump to 25, 30, 40, 50, 60. All right. So essentially you do six trades, you get $207. So if you have a bad day, you only lost maybe $40. Or if you try to jump back in for another round, you would have. So when I do an extra, I don't double up. I'll do like 60 in that case. Not 60, I'm sorry, another 20 to give myself like one more chance, right? So control the bleeding is all I'm saying. But when you do lose, remember if you have more good days than bad, you're always going to be in profit, right? So, it's not, there's no way of being 100% with this, but you can be really good at it, all right? So, to me, like I said, it's all about controlling the bleeding and just having that mature mindset to say, like, hey, I don't need to come into this making $600 a day. Even this 207 number, that doesn't have to be the case. You can do that 20, 25, 30, 40, get $105, 7 days a week. That's still good money. Okay. So it may not look good daily, I guess, but like when you look at it in your account at the end of the month and you realize like that you're up, you know, a decent amount, it'll help, right? And then as that account size increases, your personal account, then you can start to scale down the level. But I'm not gonna take a long time because I have two trades here, and each I think the video me, it's like an hour and 45, but I'm gonna speed it up as always, and then I'm going to kind of hit on other things because I can show you like the process and how it works even as my trades are going. Okay. So let's get to the live and stuff. And like I said, this is just a continuation of yesterday's stuff where I was able to, get a start to finish as opposed to like bringing it in somewhere in the middle. Okay. Okay, so I am going to play the video, and like as I say things, I'll let you know. This should be very clear, and like I just want you guys to understand. Again, this is weekend work, so my whole focus is just building the account up to my initial start for Monday. And if I'm able to, then great. So Friday night, I always pull all the funds, and I'll leave myself with like $2 or $3, and then I'll do $1.50, and try to go all the way up to like $5 a trade and just build it up. And that gives me a chance to practice, but at least while I'm practicing, I'm making money. I don't like to go to the demo anymore, just to be honest, because the demo, like once you train yourself to not be fearful to trade, you don't want to go back into demo because then you're going to be, um, I guess you have to go through it, but like to demo, you have that safe place, and I mean, you can make a lot of money because they're not really trading with your real money. So I don't want to get back uncomfortable by trading like fake money. So I'll just keep the amounts low, and generally at the end of the weekend, I'll give myself a few dollars to work with and just practice and build the account up, which is what I'm doing. And I don't want to risk the account as it's growing, so I just keep the numbers low. Okay. So ideal is to always have, like I said, at least $25, because I mean I can always, even for the last part that or that little breakdown that I gave you guys, I'll generally do a two practice run initially with half those amounts, before I do like the six trade, and depending on how I'm feeling, I'll keep going, or if I feel like I'm at a decent amount, then I'll stop. But regardless, like I said, when you don't have anything that you're aiming for in particular, like, you're your own person, you can stop whenever you want to, or you can keep going. It's just that I try not to go outside of six successful trades because at that point, I just feel like that's greed, and at some point, it'll bite me in the butt. So that's just me. But let's go. I'll go through it, and as you can see, we're trading for the hour, and I think I'm looking at the hourly right now, the hour clock. So remember, based on yesterday, you want to start off by always dividing up your days, just for the ones that you see are meaningful. So this one, it's straight downward energy, which is fine for a weekend, but I don't see any real opportunities. And I can actually go over stuff as we get it. This one, I feel like I'm too late. As you can see, it's a big spike. This, I'm just creating another vertical line to see where the day starts. So, yeah, so day starts and then it just shoots up. So I don't want to get involved in that one because I feel like it'll mess me up. And then remember, we're outside the channel. So I always like for it to come back in the channel before it pushes it back out. I wouldn't never jump in at that point. This one is fine, but it's going up to the 90 is what I'm pointing out. So let's just see if we find a better one. Same thing, but this is going beyond the 25. So I'm just trying to see if there's an opportunity. So the weekends, this is why I really don't like doing weekend trading, because it's, the opportunities aren't really there that much. And I should have did a day there. This one actually looks good. I'm just trying to see where we fit on the other time scales to see if there's an opportunity. So what I'm showing you right here is, and we're not going to play all of this, just so that you know. I'm going to fast forward once this gets started. Oops, I think you saw me get activated. Let me back it on up. Let me let that play out, and then so just 15. Let me see. MAD USD. So this one, what I want you to see is this is a 15-minute clock. All right. So the ideal part that I would have jumped in on this one would have been, remember I was telling you, like when it comes back into the channel, I want to jump here. This being showing up like it is now so this is the 15 minute. If I'm jumping in strictly looking at 15 minute, you want to extend out that time frame. So 45 minutes, an hour, it's hard to see because of the small area there, but if I clicked on it when that channel began, this would have worked because three candles in, I'm sorry, 45 minutes candles. For 45 minutes, I would have been where we're at right now, and I'm sure it's going to continue up. Okay. So you got strong pitch here. You got, at the time, it would have been curving, but it would have been up under. So remember, you don't want to jump in too early around this area. You want to allow it to kind of really get up under it so you know that you're going to catch it on the way up, especially for the longer time frames, because it takes a while for it to like smooth out and go up. Remember, this is 15 minutes each candle, so you don't want to jump in prematurely on a 15 minute. It's okay to jump in late. Even me jumping in like here may have worked out because it's a weekend and it's slow. And then also, if I had the correct day on here, I can probably see, that, the day probably started here. So it came out strong, but it's trying to return back up to this area. So this would have been a good trade to go into. I just wanted to see if maybe something was better because of the lateness that I'm coming in. But also, with this being a just $5 trade, I would jump in here normally, but I wanted to make sure I got you guys something, you know. So zooming in, sorry, just to see, and this is again showing you guys at the 5 minute mark. So showing you at the 5 minute mark, it's outside the channel. And then as it comes into the channel, that's where you activate. So if I would have saw the 15 earlier, right, and then I jumped into the 5 minute, then this definitely would have been a 40 to 50 minute candle. Because remember, we would have entered here. So again, I'm just late in this case, right? So if I'm basing this on the 5 minute, you're going to enter near the bottom. It's okay to enter a little bit higher on the 15 minute as long as you have good cross and clear direction. And at the end of the day, you can always put more time out there, right? So if you want to give yourself some extra wiggle room, instead of doing a 45 minute, do an hour. I probably did one for an hour and a half yesterday, and yeah, it took forever, right? So, and that was just me, just, I don't, that one what isn't recorded, but obviously because it was just too long. But it won, right? Very decisively. So, that's the beauty of the weekends. Like it's generally doesn't do too much movement, so you just kind of come in at the most optimal point, and then it just continues and continues and continues. So, it's easier to, I guess, find opportunities. It's just to me, it's better to play the long game than the short game. So let's continue with the video because it's going to at some point. I think this is the one I got into. I'm sorry, it's been a long day. Nope, it's not apparently. Okay, so looking for other opportunities. The red is over the green, so showing sale, but at the bottom here at the oscillator, it was bouncing up. So just trying to see what else I have. So you don't have to force anything. And again, 15 minute, 1 hour is what I look at. I don't really get into the 30 minute. And now I'm just showing you that it's starting to curve out. Still in a buy, but those last two red, makes me a little hesitant. So this one, the red is over the green, but as you can see, those two bars are, try to stop that before we have it. So this one, is retraces, and then this is the projected direction that I have, right? So as you can see, the green is under, okay? It's not like this. So don't fall for this one here where it's going down. Let it start to curve out because it's going to do this type of motion, all right? So like I said, that's something that you just have to get in the habit of seeing in real time because it's easier to see it obviously when it's there, not when the chart is already completed, but I want you guys to be able to see it like prior to, right? So the let me erase some of this. So you got that, and then I got the two supporting green bars, so I know it's going to go up. This is going down, but as you can see, it's starting to straighten out, or then it will go up. The RSI is pitched up just slightly, okay? And I'm not at the top line, so I feel fine about this, all right? So I'm going to let you see how this plays out. So just for extra confirmation, we want to zoom in, and this is just me getting the full picture so I can identify that actual trend. All right, so small retracement, and like I said, I feel like it was going to go back up. So now I'm just going in for a better entry. So 15 minutes showing the same thing. The only issue that I see at the 15, goodness, I move fast with this. Hold on, let me back that up. Once I get in here, I'll speed it up for you guys. But I just want to get you to understand the concept here. So you saw what it looked like on the longer end. And again, I gave myself an hour to give myself some time and wiggle room. So this is pitching upward. We're very early in the pitch, right? So it's not going, I don't feel like it's going to go into a sell. And just remember, based on our moving averages, we're in a buy, right? And you just saw the overall strength of that increase going down on a longer time frame. So we know what direction it's going. It's just that, hey, is this the best time to jump in? Of course, because I'd rather jump in near like the bottom as opposed to at the top. You don't want to jump in at the top of the candle. You want to jump in where you know you have some wiggle room. Outside of that, know your zones, right? You got a top here. So you got a lot of space. For each of these candles yeah, these are the 15-minute candles, right? So I got a lot of room to move up. And then in terms of channel is starting to curve. So it's letting me know that it's opportunity that this is going to continue up. Now, yes, you can be a little nervous of the 95 being almost touched, but or near the top, but as you can see, it's been up there before, right? It's been up there before. So in relation to where it's at now, to where it can go, you have a lot of wiggle room. And then this, remember this 50 line here lets you know that, hey, it still has quite a way to go up to 75. And again, this is the 15-minute chart. If this was a 5-minute chart, I wouldn't just base it on a 5-minute chart alone. Okay. So I'm going to let you guys see the entry in terms of ideal, uh, trade and the process. Remember, actually, let me back that up. The process, there we go. Okay, so in terms of the ideal situation, because it is slow and I missed the ideal spot to enter. So if I was to be like I said, if this was an actual amount that I cared about, I wouldn't have entered because it's not processed. But this is 15 minute. So ideally, remember, we want it to go outside the channel and return in the channel. Once it returns in the channel is when you jump in right there, okay, where that white line is, okay? And then remember that same area is supported here. We're starting to go up, and then you have like this going up from the 5, okay, or the 25, sorry. So remember, longer time frames, it may not touch the red, but in this case, this would have been the ideal. That would have been the ideal location to jump in, and then yeah, I mean that's basically what we've been working on. But you can play off of the 50 is what I was doing, and that's what I've been just testing out because I try to find more opportunities to win trades than just kind of stick to the same thing. Because I know at the end of the day, I'll have that. I just want to make sure that I have, a large enough bag too on my end to do other methods. So going back into the hour, just to explain the same thing is what I'm showing you. It's going to bounce off the 50 and go back up is what I was showing on RSI. Went back into the 15 again, just to see where it's at. And then the entry on a 5-minute is showing me like, oh, it's going back up in the green. So I'd rather catch it at the bottom than at the top. All right. So on the 15, I'm in the sell, or the 5 minute, I'm in the sell, but I'm overall in the long run, I'm in the buy. So I'm going to go with the buy in this case. And essentially, if you did, again, that same trade that we were looking at before would have been this area, and you would have entered. It's hard to see, but you would have entered right there when it first touches, because that'll be this part bouncing off of the line, and then this one is just going up. So this one doesn't touch, but it's close enough that you would recognize it. And then the MACD, if you can see this, is underneath. All right, so remember, this is all the straight line in real time, so you'll see what it looks like. Okay, but that's what that would look like on the 5 minute. So I really like trading on the 5 minute because it really helps. And like I said, when you trade on the 5 minute, 40 to 45 minutes is ideal. Generally, I do 40 minutes, not too much 45 because I haven't had any issue with 45, but I just, I feel like it's up there already enough at 40. I don't want anything crazy to happen in the last 5 minutes. The only time I would maybe extend to 45 is if I get caught and like this area where I don't know. I don't know why I would do this, but if I was to try to, I mean, this would be against process, but let's say like here. So you see this area where it's not touching the line yet, but it might. That and that would look like this. So then that's when I would give myself an additional 5 minutes just because I know it's going to play around and wiggle around before it goes up. In my opinion, just don't do it. It's best just to stay out of it and look for those ideal situations, okay? Or look at a longer time frame of trade. I wouldn't mess around with the shorter time frames. Like I said, there's just more to me. I mean, it's a longer wait, but in terms of my win to loss ratio with the longer ones, I don't have any real issues with that. The shorter ones, I mean, you can, like if you do a 7, let's say a 4 to, what was he talking about, 5 to 7, 5 to 6 minute trade, it'll go in your favor for 4 minutes, and then let's say that last minute it won't take you out, and then it goes back up, and you'd be like, man, if I would have just did 6 minutes or 7 minutes or 8, then I would have got it. Or if I would have did shorter, I would have got it. So then you trick yourself into doing 3 minutes, and then you run into the same issue where you're just not allowing the time. So to me, just this is a game of patience, man. Just trust me, because if you're only looking for 6 opportunities, I mean, you can find them. But it's really not that hard, and it's just being present to catch it. Because even with this same opportunity, this is one. You have two. You have the second one. I mean, this would technically be the first one, but this would be your first one here. All right. So as you can see, it's touching. It's touching. It goes down. So these are really easy to spot. Okay. But you just have to have a strong basis as to why, like when you start to pay attention to this stuff. So, um, like I said, that's two opportunities there on one chart, and you have several different other ones. And then if we're looking at, if I was paying attention to this chart, and this is what is this, this is the 5 minute, then the second opportunity that you have would be, and this is a good time to go over it, so let's just check it out. So you wouldn't do any of these because remember the channel, remember I told you guys about the channel. Make sure the channel's not strong against you. You want to make sure it starts to curve out some. So it doesn't start to curve out until really this area to the right. Okay. So if you jumped in, you would have jumped in on the line here again. And if you did 45 minutes, I don't know where the 45-minute would stop, but it'll be somewhere around this area. As you can see, you would be underneath that or over the line. So technically speaking, with this one chart, you got 3 opportunities if you were around to catch it. Okay. But again, if you're not comfortable with the whole curving thing, I mean, well, you have to because I mean, this one curves too. So it's small, it curves. It's curving, so you gotta be able to recognize the curve to know when to get active. Okay, but just stay away from these situations. Even if it's touching, stay away because it can it can technically, like it's doing, go further down. And I mean, if you can find a play around that, then that's fine. But I just say I would just wait, in my opinion. And honestly, looking at it here, so yeah, because this would have been where you would have entered, and 45 minutes could have worked. It just may have been lucky. I can't see where the candle would end up, but either way, those it's a continuation down, and then it gets a little stagnant going up, and then it goes up slowly. So I don't know where nine candles, the ninth candle would be to say that would have worked if you would have jumped in on that steep dip. So I'm gonna speed this up because this is more watching it, but hopefully the concept is being understood. So and then it takes off. These are the wins that you want. You want the decisive wins. So it doesn't look that far away, but it is that far away from you. Okay. So you should be notating, like I say, record everything, record your sessions, and that way you can see what you're doing that works and what you're doing that's not working. You don't want to get in the habit of just trading just to trade. Like everything is an opportunity to learn. It's just like I said, me personally, what I look at to let me know to be busy is the RSI. Once RSI is touching, I look at oscillator. Then I'm looking at MACD. There's a lot of crossing moving averages at the top. You can try to spot those. It is hard to see with everything going on, but the moving average that I look at when crossover is in the MACD, so the MACD line, especially for the longer time frames. Like if you're jumping in for an hour, 45 minutes, an hour, you sometimes, yeah, you definitely want that cross to have occurred if you're looking at those, longer time frames. Okay. So I'm just showing you what it looks like with different time frames. So this is the minute, even though we didn't go into the minute. This is the minute, I'm sorry. So you see how that looks at the minute chart. So the minute is what I'm pointing at is that where the hand is pointing is where I entered. But as you can see, straight down is kind of in the middle, and it's in the middle. So different time frames give you different things. So to me, go long, aim for what's long because it's easier to catch those opportunities. That same opportunity wouldn't have presented itself if I was just looking at the minute chart. Okay, so that's what I'm trying to show you. Then I'm going to let this speed out. And this is back at the 15-minute. As you can see, in that 15 minutes, it's still pitched upward and it's still got to get to that 95. So that's what I'm trying to show you, that at the 15-minute, the oscillator and the RSI, as you can, I mean, you recall what they look like initially, it's still a lot of space. So that's when, if you can get an idea, this is the top end up here. So it's still a lot of room, and then it doesn't just spike down; it has to like curve, right? So you practice, like practice, and really pay attention. I don't care if you record all your trades or just maybe one or two, but make sure you're looking at the different time frames and really get an understanding of what you're doing. Like, don't just do this to get money and not like learn from the experience. So this is going to cash out. The next one I jumped into already, and I'm sorry, I thought to record it after, but this was for 45 minutes. So this was the hour. This is the 45-minute, but I can show you process still. All right. So, I wonder if I zoomed it in a little bit better. So this is the 1-minute clock. I didn't trade off the 1 minute. I just was looking at it to show you the recording. Okay. Um, but wanted to go over the process with you here while this is up. So this is 1 minute where the bottom's not touching, but it's close to. Same here. But as you can see, it leaves the channel in this bracket here, it leaves the channel, and when it first touches channel, you jump in there for 45 minutes. But this is why I don't like looking at the minute clock, because it looks real crazy. As you can see, it's a lot of mess. going up here. So there's a two. You got, again, when you guys see these opportunities and you say, oh, 6 trades, that can be a lot. It's really not, because you got, I mean, I don't know where 45 ends, but you got one opportunity there. You got an identical one right here. Oh, goodness. I'm sorry. Let me do that over. You got an identical one, and I don't have to keep explaining this process because you guys get it. So it goes outside the channel and then comes back in on this end. And on that end specifically, because let me erase that because that looks confusing. Um, because you're wanting it to match where it touches, right? So it touches at the top in the red here, or in the green, I'm sorry. Or no, the red, I'm sorry. So yeah, this is it's hard to see a straight line. Let me just try. So that red is the first touch and goes down. And then this is here where it touches and goes down. But the problem is, what do we see, right? What do I keep talking to you guys about? This strong channel. So this is the reason why I say, hey, when you see this strong channel, don't get faked out by the oscillator and the RSI. It can still go up. So what you're waiting on is some curvature. So right here, you start to see it curving more. Okay. So you start to see it curving more in that part. So that's why you skip that first opportunity. That's really going to be the biggest challenge to all of this. Because if everything else, I mean, I don't have to keep repeating it. You get it. But once you guys can recognize how to use that Kettler and that channel to help you out, in terms of entries, then you'll be good. Now, I wouldn't try to use this method to say, hey, it's going to continue up, so let me buy, because it's hard to me. To me, I have a hard time knowing how high something would go, as opposed to, or down, how low it'll go, or how it'll go up, as opposed to timing a reversal, right? So I don't really know. I don't know what to tell you with that, because I don't, and I don't really need to, because everything that I've been teaching really up to this whole point has been based on, I mean, I'm thinking all of my methods have all been based on the retracements. So I don't know. So I would just kind of stick to something like this. If you want to try to find a method that works around going with it, so you can catch both sides. I mean, I don't know how well that'll work out, but back to what I was saying, you got one opportunity. This would be the second one because of the curve, like I'm telling you. And then the third one is right here. So this is how easy it is, honestly, to find free opportunities. You just have to look at it through a different lens, right? So me personally, I don't like doing the 1 minute clocks anymore, because I don't mind, I guess, on the weekends, but during the weekdays, it's hard to follow and do work and do whatever else, right? But on the weekends, it's easier because it's not much going on and everything is kind of consistent. During the weekend or during the weekday, it looks, I mean, it can look like this, so it can look like this area. Okay. So, 3 opportunities, as you can see, right? And then this last opportunity, just so I don't confuse anything, um, as you can see, it is going downward. And oh, I'm sorry, you don't even see that at that point. I'm sorry. So the entry part, you can see the curve going down. So it would have been formed like right there at the time. So it did start to straighten out, but it was going down. I mean, I don't know what else to tell you. It was going down. So I continued with the downward motion. Now, technically speaking, um, let me speed this up because I made my decision already and I didn't have, sorry. I made my decision already and I didn't get a chance to film the scaled out version. There we go. So this is a scaled out version. This is the one that I took in consideration. So let me show this so you can understand why I went for sale. So moving averages, everything's underneath the white. So sell, sell, sell. And then as you can see, the curvature is going upward and then it's starting to curve down. Okay. So looking at it at the 5 minute scale and then seeing this long list, and then this is my bottom. I know I'm cutting it close, but I know, like I said, with the weekends, how this works out, everything typically takes a long time to everything moves in one direction, essentially. It's not like a lot of movement. Okay. So I felt good about it. You know, I know you got higher highs and then your lows are high. So this is a low, and then you got a high and a high. But I know that that's a pump fake because again, I'm looking at the channel. Okay. The channel is what I trust. And so I am going to continue this a little bit faster here so you can see it. And then also, actually, before I forgot to hit on the key thing, all right? So this is the cross. You got a good mouth open. You got good downward motion. I got a good pitch down here. So I know that it's close to the 25, but it's, like you saw in the last example, it's not there. And then this doesn't make me too nervous because I know it can straighten out and then continue downward. So the RSIs let me know that there's even more space that's available outside the oscillator. Okay. So that was my reason for going into a sell. And then I used the zoomed in version to kind of support that further. So I did go into the minutes, but like I said, I don't prefer to use the minutes, but if you got to, you got to. So I'm gonna speed this up. And as you can see, this is a very solid win, right? So broke through your prior bottom. You got the zigzag that's pushing it down. Now I'm showing you what it looks like at the 15-minute mark. And this is something else that I looked at. So the one thing I didn't do first, unfortunately, was create a vertical line, which I know I'll end up doing for the sake of video. Let me see. There we go. Or did I? I don't know if I did. But anyway, let me go into this. So 15 minute, you see the cross there. Remember, the cross on the oscillator happens before the cross at the MACD, right? So a lot of room to go on the oscillator. RSI still looking like it's the same. And then according to, uh, actually, let me redo this so you could have saw where it was in real time. So my entry was here. Okay. So entry was here. Entry was on the red cross, like where the red dot is, if you can see that. I'm just trying to line up so you can see what it looks like in real time. And then still pitch downward. Okay, so it's moved down obviously a lot more in the 45, almost 45 minutes that's been running. But that's where it was when I entered. And like I said, the green is curving. So I know it's going to cross. It already crossed on the oscillator, so I feel confident in the sell position. Okay. Now it's not the ideal setup. Sometimes, like I said, I don't want to. I'm still in that channel. I would like to get in a lot sooner, but like I said, with the weekend, like you really just have to start trading on the weekends and weekdays and the evenings to know how things move. Okay. So I'll speed this up because I don't have much to cover. After that, I think you guys understand the concept. I'm just trying to show other opportunities in the day where you could have maybe taken advantage. So I'm moving this stuff so you can see. So 1 hour. So always look at the hour. It gives you that same, hey, we're in the sale. You see the MACD is crossed. This is what it looks like at the 5 minute again. And again, just showing different ways so you can see different opportunities that you could have taken at the 5 minutes. So you got one here because it's curving, right? You see the curve? So recognize that. So we got one. So if I was paying attention earlier, so that vertical line is my beginning of my day, right? So I think that was one already that we had recognized, right? Um, but let's just talk, under this time frame. So under this time frame, You got one opportunity because this all qualifies. Okay. The second one would be, so second one, this one is still pitching upward some. So it starts to curve around here. So you would have maybe jumped in a little late, but you would have got it. This would have been 2. So RSI is close at this point, and then oscillator is crossing over and going downward, and then you actually have the cross there. So that would have been your second option. Again, I don't know if it overlaps with the ones we're looking at together. I'm just trying to show you how quick this can be to make, like this isn't crazy talk, right? So this is why I like the 5 minute because it's so much easier to catch these. And again, this is the 5 minute chart. So I showed you 2 opportunities. The third one that qualifies is here. No, I didn't get all these because I was busy today, but I wish I wasn't. So this would have been 3. You see that curve on the MACD, and the entry would have been, I think we talked about this one already. This would have been 3, and and then I think the last one would be on, this one would be closed. Nope, that's not the one. It was this one. So yeah, some of these are overlapping with the ones I already showed you. But that's 3 right there. Um, I feel like what I've showed you. I see. Let me just do it. This was for if you were up this early. No, that doesn't count. Sorry, it doesn't matter. You wouldn't be up that early. So yeah, so we got 1, 2, 3, 4, and then 5. So sometimes you just kind of sit on one chart and get the most of the work done, right? So so I'm just showing you. So again, what you're looking for, oscillator to touch or RSI to touch, oscillator to touch. Wait for it to get out the channel. As it's entering the channel, that's the ideal time that you're jumping in. As long as you can tell that channel is curving. All right, not pitched strongly downward. If it's pitched strongly downward, just stay out of it. Trust me, it's not that big of a deal because it'll at some point do what you want it to do, and then you enter, right? So I said I went over the details pretty heavy yesterday, but I just kind of wanted to show you kind of what it looks like as you're getting into it is the key thing on this video. Even though I guess the second one I recorded late, but I'll probably shoot another video out like this so you guys can see it. Um, and then I mean, I don't think I have any more strategies, honestly. Like this is, been pretty solid for me. So, again, weekends practice, man. Practice, 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 but practice honestly all times of the day because you need to, like the weekends are good ways to get just quick money, here and there, and to kind of work on your strategy. But the market just moves different on the weekends than it does on the weekdays, than it does on the weekday evenings, right? So just really get a feel for things and during all those times, and then find the times that work best for you, But the longer strategies are easier, trust me, for those that are doing this and you're working. I know I showed like some quick things that you can do, but it's really hard to catch them, and that's why I started to kind of get away from it because I was missing opportunities because somebody calls me or I got to do something, and then I'm like, dang it, I missed it. Okay, if I catch the next one, regardless if I'm on the phone, I'm going to jump in. So now I'm trying to press a button while somebody's talking to me on the phone, and then I missed one of the key things that I should be looking out for. So with the 5 minute chart, 5 minutes is a long time. So if you see it, you'll see it in the 5 minutes, and you can take your time to make sure that everything is lined up like it needs to before you enter. But really, if you're trading in the long term, like Matt, make sure that the money's meaningful. Like you don't want to, like I know you see I'm doing $5 right here, but this is just like for me to practice. And like I said, I just want to give myself. I don't like to do any deposits Monday. So like Monday to Friday, I don't like to do deposits. If I don't have to, I like to just take everything and I'll just leave what I need for the next day. It's what I do. But at the end of the week, I'll just take it all, right? So take it all, leave myself with a few dollars to kind of play around with in the weekend, trade a dollar or two, and just work on different strategies or things that I see as opportunities, but I'm too chicken to really put real money behind. So, yeah, so you guys got it. Until next time, like I said, I'll probably put one more video out before I kind of go on a little break. Doesn't mean anything, but I just, yeah, I mean, it's a lot of information, to be given out, and I don't know how long I'll be making these recordings, because this does well for me, and like I may have to go into maybe considering a Patreon, or if anybody wants like any like really one-on-one training, but I'm not gonna do it now because I got too much to do. So hopefully these videos help, and yeah, if you guys want more material, man, leave a message, let me know. I mean, I'm trying to accommodate and help out as much as I can, but we all busy, right? So have a good day, and follow, like, subscribe. It lets me know that you guys appreciate it, and maybe I'll just keep it going. So